Hello guys, good morning. Let's analyze today's trade. I already do. And today I have bullish bias on the gold. As you see, we expanded and this is Wednesday. We retrace to this daily fair value gap and form the SMT with silver. So I was expecting this Thursday candle to expand. This was my whole trade idea. And if I want expansion candle, so what I want to see on daily, I need small wick. As you can see, this wick is small. And also I wanted price should form the wick above this 50% of this wick. So that is how mechanically we determine the wick size. So if I am expecting daily candle to expand, so how can I take positions? So I have to wait for the swing point. So this is not the technical C2 closer, but we can expect this is the gap form. Price opened earlier on the 5 p.m. candle it expanded, but 9 p.m. candle came down below the opening price of the daily, and we formed the wick here at this key level opening gap, and we have C2 closer on the gold. On the silver, if you see, the candle close inside the range of this candle. So I was expecting the next 4-hour candle, which is 1 a.m. candle, will expand up to this high is the first target, low hanging fruit. So when I am expecting this candle to expand, so I want the same thing. I want this wick to form upper half of this wick. So that is how we determine the wick size. So how can I take entry? Come to the 1 hour, we have to wait for the swing formation. When the 1 a.m. open, you can see it is opening within the T-trade factor model. That means what? C2 is already closed above this candle range. So we can expect 1 a.m. to expand towards this high, towards the highs. So you can see this is how the 1 a.m. candle formed. So on the 1 a.m. I didn't find I didn't look to take any entry because I was waiting for this 2 a.m. open. But we have the we have the trade opportunity here also. 1 a.m. I will see. So when this 12 a.m. candle closed inside the range, first we need to confirm if there is any reversal formed or not. So if you see here, we already had the reversal. I was monitoring the chart that at this time also, but I didn't took entry here. Uh, this is this is the reversal. That means reversal. See the reversal how it formed. It is a V-shape reversal. Expansion. This is what retracement into consolidation. Expansion in, expansion out. That means what? It is a reversal. After reversal, we can expect retracement and consolidation. This is what happened. So how did I took entry? I took entry on the 2 a.m. open. If you see, this is the 2 a.m. open. Okay. This is, let me write, this is a 2 a.m. open. So on the 2 a.m., if you see the 30-minute chart, 30-minute chart, what do we have? We have we have SMT also here. See, see this low is taken in silver here, but in gold it didn't took the low. Okay, so we have SMT here. So I was expecting this candle to expand. So I took entry on this 2 a.m. candle because we already formed the SMT. So next candle should expand. Okay, this is a candle 3. So first we need to see this SMT needs to be get confirmed by the change in state of delivery also. If you see, what do we have? This is the initial entry. We form the SMT, change in state of delivery here. Also, what happened? Here is the 2 a.m. open. This is the 2 a.m. open. Okay. So what do I want to see? I want to see open low high close. We already confirmed the order block here. We once again confirm the order block here. Okay. So this is continuous order block. Price needs to respect opposite down close candle. 2M open, retested the order block and closed above this candle. If you see here, close above this candle. See. Okay. When price closed above this candle, I took entry. I took generally entry in this candle. And that is the immediate expansion. Because we are close to the drawn liquidity, I targeted 2R, but you can see this already ran to the, towards the drawn liquidity. It's basically 8R trade. But obviously we will not hold. But I'll show you how can you, if you forget to take entry here, let's suppose you missed it, how you can take continuous and entry here. So you just need to wait for 1 hour and 30-minute candle to close. Here what happened? This 1 a.m. candle closed, but this is a rejection. If you see the 30-minute, what happened? Price expanded and it is a strong close and price retraced here. Okay, so this is a kind of consolidation. This is not the aggressive reversal. So if price is consolidating above the highs, that means this is a continuation signature. So on 3 a.m. you can look for continuation. How? 3 a.m. open low high close. So 3 a.m. open here. You can take, you can, look to trade continuous order block entry. Here it is. This is a 3 a.m. open. Where is the continuous order block? Here. Because this consecutive down close candle close this short, sweep this short term low, and price is closing over this down close candle. See this reaction with this fair value gap. Okay, this is the good signature if we have the fair value gap and V-shape reaction. So the second entry could have been here, and this is actually the very good entry, but I didn't took. I stick to my, uh, you know, trading plan, because if I have one win in a day, I will not look to trade anymore. So this is the actual drawn liquidity, and this is a 3.42 hour trade. Very good trade. In gold, we have all the down close candle was respecting. This is the continuation signature. Yeah, so this is the trade. Yes, I want to also highlight one more thing. When I executed this trade here, I I have done some error in risk management. I supposed to, I was already planned to risk 1% here, but I don't know how the risk, the risk got increased. It increased to 1.5%, and yeah, this is a execution error, risk management error in this trade. I cannot deny. From the last two trade also the same thing happened, because I was executing the market order, and during the market order the risk management is getting, not getting fixed. It is getting plus or minus 0.2% up, or sometime down, something like that. Yeah, down is manageable, but if the risk get increased, from the actual amount, this is not good. This trade could have been, loss also. So instead of taking 1% lot, I could have, taken 1.5% loss. So this thing I need to, journal it here so that I can reflect it back. So yeah, this is the trade for the gold. And so let's suppose if someone missed all of this move, then how he can take entry. So what will be the criteria? So we have to wait for this 4 hour candle to close. If you see, this is the swing point formation. On the after 1 hour, this candle will close. When this candle will close, we want next candle to get expand. So what we need next candle to open and form the low somewhere here, and we have to target, towards this failure sinks. So also we have previous daily highs and we have average daily range are intact, so gold can expand. So no issue with it. If someone move, then there is a chance of, repositioning on the continuous, on the continuation. So yeah, this is the trade.